All right, hello and welcome to today's webinar. This is all about a recent report I put out called the Real Estate Portal Strategy Handbook. And yeah, I just wanted to kind of get out there and talk about this. So that's what the next 30 or 40 minutes are going to be. I'm going to go through a whole bunch of slides, want to kind of talk about some of the biggest highlights and the key takeaways from this. So yeah, I'll jump in. This will all be recorded. So if you kind of zone out or you want to relook at some of the slides afterwards, don't worry. I'll send it out, record, and send it out to everyone afterwards. And yeah, thanks for joining. Appreciate everybody kind of spending a little bit of their morning, afternoon, middle of the night, whatever time it is for you, with me. This is really exciting stuff. I love talking about it, love doing the research, and it's my pleasure to kind of pass it on. So yeah, I thought it'd be interesting to kind of start with this. For me, people often ask me, like, how do I do this? Do I just kind of sit down and say, all right, I'm going to do a 200 slide report? The answer is no, not at all. I'm kind of lucky enough and have the benefit to kind of be able to follow my curiosity across the industry and just start going in certain directions, see what happens, see where it leads. And for me, this is where it ended up, but it didn't really start this way. It was a couple months ago, and this is what my office looked like. I was looking at Emo Scout 24 in Germany, kind of their latest results, and just went down this rabbit hole of going deeper and deeper and deeper. They were doing some really interesting stuff in terms of where new revenue was being generated, consumer subscriptions, and then going back into mortgage, whatever, all the big real estate portals are talking about mortgage. So yeah, just kind of going deeper and deeper and deeper. And this is what it started out with. From there, it kind of turned into 10 slides and then 20 slides. And then I didn't think about it for a couple of weeks. And then I came back, and before I knew it, I kind of cracked 100 slides, and I just kept doing all this more and more research of portals around the world, not just this one, but everyone. So that's where it started with me. The report itself is about 200 slides broken into 9 different sections. I'm not going to go over all of this today. Today, I'm actually focusing on these kind of 5 on the left, and a quick snapshot, a preview, the key trends out of those big areas. So to start out, the general strategic framework here, I'm thinking about real estate portals around the world and how they're growing, right? And that was weird. This is this graph that I put out a couple of years ago. This was back in 2018 when I first started researching, and this was my mental model, the framework that I presented to talk about how real estate portals were moving closer to the transaction and getting involved in more of the transaction. So I benchmarked these portals around the world and just looked at what they were doing, their strategies, where they were investing, and there was this clear shift up and to the right. Right? The big real estate portals were tapping into new revenue streams as an area of growth by getting closer to the transaction and getting involved in more parts of the transaction. But as I did this research, I realized this needed to be adjusted. While this was right for 2018, it was no longer correct for today, 2021. In fact, what I was seeing was kind of a refocusing on the core. Real estate portals are moving closer to the transaction, but they're actually becoming more focused. Not getting involved in lots of things, but actually focusing on a few things. And I think that was a really important differentiator, at least for me. And I wanted to update it, right? I wanted to go back and kind of update this. This wasn't correct anymore. So the growth, that refocusing, again, the further I dug in, it was concentrated in 3 key areas: listings and lead gen. All right, so that's kind of pay-per listing or the lead gen model that you're familiar with in the US with Zillow and Realtor.com, rentals, and then mortgage, right? Everything, all the revenue generation was kind of in those 3 key areas, not everything else. And then out of those 3, listings and lead gen was the big one, right? That was the biggest driver of revenue growth. And then mortgages, always talked about, but kind of a red herring, the profit very elusive, and even revenue growth was elusive for these big portals. So again, I think these are really interesting takeaways, because if you just listen to big real estate portals, or you read the annual results, or you talk about the strategy, they're all talking about building this expansive ecosystem where they're going to get involved in all areas all over the place and be the be all end all for a real estate transaction. And while that's true in the sense that they're they're moving closer to the transaction slowly. They're actually staying more focused. All of the revenue growth is not on a big ecosystem. It's actually these things. All right. Sorry if there's a little bit of a delay there. Anyway, so talking about the growth engines, all right? So diving in a little bit more detail here, right? So we have listings and lead gen, rentals and mortgages. That's where the big revenue growth is coming from, right? And as I dug in, looking at each individual portal, this same trend was there. So if we looked at Zillow, right, in the US, over the past 3 to 4 years, if you exclude iBuying, right, just over the past 3 to 4 years, 90% of the revenue growth was from lead gen, the Premier Agent program, followed by rentals and then mortgages, right? That's all the revenue growth. If you look at another top portal in the world, REA Group down in Australia, all of its revenue growth, all of it was from that core listings business. So revenue in several other lines, they actually dropped, right? Including mortgage. So it's all the core listings business. And then, you kind of keep going. ImmoScout24 in Germany, same thing. All of the revenue growth was in these consumer subscriptions around rentals and an agent lead gen product, which I'll talk a little bit about later on today. So again, this concentration, over 90% of their revenue growth was from these new products. So similarities, and I'm not going to go through it all now, but it's all in the report. You just kind of boom, 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 going through all these top portals. It's the same story over and over and over again. Which leads to this result, which is, on average, 93% of total portal revenue growth is coming from core listings and lead gen products. So when we talk about building an ecosystem, that's great. But if you look at where the money is coming from and the core revenue growth, 93% of it, the vast majority, is coming from that core listings product and lead gen. Everything else is teeny tiny in comparison. So then I wanted to look at the annual revenue growth of these businesses, right? So internationally, plot a bunch of portals on here. You see the annual revenue growth is varied, right? You have as high as 30% for Realtor.com, Zillow, and Hemnet, and then kind of down closer to 10% with ImmoScout, REA, Domain, Rightmove. Everybody's kind of all over the place. But what was interesting was these portals kind of fit in with the growth rates correlated with the business model. What I mean by that is, Zillow and Realtor.com have a lead gen business model, right? Where it's basically based on leads. Whereas all of these other international portals have a listings business model, right? It's based on advertising a listing. So you kind of, it highlights this interesting aspect of where the industry is right now, which is these portals that have a lead gen business model are growing at 30+%, revenue growth year over year. Whereas the listings, much smaller, about 5%. So quite interesting. And this will flow into the big themes and trends that I'm seeing that I'll talk about later, right? And then if you get a little bit more specific on this, and I think that's specifically around breaking out just the core real estate activities of these portals. So not the overall business, but just core real estate. Plot those out, you get a little bit more granularity, but you can see, ImmoScout24 really highlights the difference between these business models. Its core listing business is basically not growing, no annual revenue growth, it's flat. But its relatively recently launched lead gen business is growing quite big, 35% year over year. So there's quite a difference here in the business model, which is definitely worth calling out. And that leads in great to this next part, which is something I'm calling next gen lead gen. All right, I think this is one of the biggest trends, the biggest themes that I've seen in the world of real estate portals over the past couple of years. And it's going to be one of the biggest ones to guide where the industry goes in the years ahead. Next gen lead gen. So what do I mean by that? Next gen lead gen is, well, I'll talk about the mechanics of it, but this is something that the portals have invested heavily in over the last couple of years, major portals around the world. So you have Zillow's launching and funding its own and building its own Zillow Flex program. Realtor.com acquired OpCity for a couple $100 million in 2018. Axel Springer acquired Miller's Agents. I know I butchered that. My French is not good at all. But they acquired them for 200 million euros in 2019. And that means the best agents. So this is like an agent finding platform. And in Germany, ImmoScout24 acquired a company called IV24 for 27 million euro in 2020, right? So some of the biggest portals in the world have made major bets into next gen lead gen. What is next gen lead gen? It starts with, it's all about monetizing leads. All right. So in the US, the big portals are monetizing buyer leads. Internationally, outside of the US, the big portals are monetizing seller leads. This is just a factor of the market, right? If you know the US market, you know there's buyer's agents and they actually get compensated for the sale. That is not true in almost every other market. So the only way to monetize those leads is with seller leads. But the mechanics of next gen lead gen are the same. So 2 steps, right? 2 things make this next gen lead gen. The first is lead qualification. After these leads are generated, the leads are qualified by the portal. So the portal has a call center, has people in the call center. They're literally calling these leads after they fill out a form 5, 10, 15 seconds after they hit the submit button. This is not, you might get a call in the next week or the next 48 hours. These people are called, immediately and qualified. Someone working at Zillow or ImmoScout24 is asking questions. When are you looking to buy? And do you have a home to sell? Or are you working with an agent? What's your budget? All of these kind of basic qualification questions. And then those leads are sent out to agents in the partner network, fundamentally for free. But the second key component of next gen lead gen is a commission share. So if a lead transacts, then the agent pays a percentage of their commission back to the portal. And those commissions, and again, this is like, 50 slides in the full report here. I'm just touching upon it, but that commission share is generally about 1/3 of the agent's commission, varies. And again, that's looking at the examples here, the US market, French market, German market, about 1/3 of that commission. So it's quite an interesting model, but that's next gen lead gen, right? And this is a big shift. The portals are qualifying the leads, and then only if that lead transacts does the agent pay a percentage of their commission back to the portal, a commission share success fee. These systems are really interesting. They're gamified, right? So the more updates an agent provides, the more leads they'll receive. It's self-reinforcing. Think of like Uber drivers or something like that, right? The more 5-star reviews you get, the more rides you're going to get. The better job you do as an agent, the more leads you get. It's gamified, and it's really interesting. And it's a way to kind of encourage good behavior, not just for the portal, but for consumers as well. If you're a consumer and you fill out a form, you want to hear back from somebody. You want to hear back now, not tomorrow, not next week, right? You want to hear back now. And if you want to talk to an agent, you want to talk to the best agent who's available now. Not necessarily the best agent, but the best agent who's available now. As I mentioned, internationally, to generate seller leads, what all the portals are doing are focusing in on valuations and homeowner dashboards, right? The best way to generate a seller lead is by telling people what their home is worth, an estimated property valuation. In some markets, that information is publicly available across all portals. In other markets, it's not. It's kind of hidden behind a wall, and you need to go through and fill out a form to be able to access that. But I see the same thing over and over, right? In Germany, ImmoScout24, this is it, right? You sign up and then you get an estimated valuation, and you can keep track of not only what your home is worth today, but what it's worth in the future with a big detailed report. Same in the UK with Zoopla. There we go. Same in the UK with Zoopla, right? Estimated price. This is what you get when you sign up. In Australia, REA Group, same thing. Estimated value. This is what you get when you sign up, and you can kind of track it over time. It's the same thing, right? That's kind of what we see. People generating seller leads by offering these homeowner dashboards. Now, next gen lead gen is it's a big evolution, and it's an improvement on the consumer experience. It's also accounting for a larger share of the portal revenues that they're generating from this. So if you look at Realtor.com, their lead gen revenue, it's kind of going up over time related to the pandemic and flattening off in the most recent quarter. But its revenue share from the commission share model, like next gen lead gen, is in pink, right? That's commission share. About 37% of its total revenue from lead gen is from next gen lead gen, right? And it's kind of, I don't know, kind of increasing over time. It's becoming a significant part of the business for sure, right? Well, as the rest of its lead gen revenue is the more traditional route, right? Kind of pay per lead or a subscription. So about 1/3 from Realtor.com. Same, actually exactly the same in Germany with Scout24, their lead gen revenue, about 33% of it is from this commission share model, whereas the other 2/3 are from a more traditional pay per lead model. So this is big, right? Next gen, lead qualification, commission share, and that commission share is about a third, representing about a third of the revenue of these portals. I would expect that, I mean, all of this, I would just expect all of this to increase going forward. Now, what's another interesting thing about next gen lead gen is it's exclusive, right? It's not for everybody. The agent network that participates in this, that is attached to it, is very small percent of the total number of agents in that region. So with Zillow Flex, less than 1%. Realtor.com, Opcity, about 10%. In France, about 7%. In Germany, about 5%. That's quite small, right? So it's important to keep that in mind. These are exclusive programs, whereas the listings or subscriptions, pay per listing, or even pay per lead are trying to attract as many agent partners as possible. These programs are quite different. They're focused just on a very small exclusive set of agents. So it's not for everybody. Agents can kind of cycle in and cycle out of this program. That's another key component there. All right, next up, mortgage. If you remember in the beginning, mortgage was one of those other areas of investment. Companies are making investments in this area and trying to grow it, but it's a bit of a red herring. And yeah, I think that's kind of what the big takeaway that I wanted to pull out in this section here for everybody. So let me say that another way. Almost every real estate portal around the world is talking about expanding into mortgage and finance, right? And it's because, they're smart strategy people. And I used to be a smart strategy person working at a real estate portal. I did the same thing. You're looking at, revenue pools and total addressable market, and you're looking at real estate and you think, man, if we can just sell people mortgages, we can make a ton of money. Like we can increase our revenue a lot. And these are publicly listed companies. They're trying to grow their revenue. There's nothing wrong with that. But it's very easy to look at that. And then you tell the story to investors and the public. It's quite compelling. It's a really great narrative. But the reality, the data, the evidence suggests that it's really hard. And while it makes a great story, it's very, very difficult to execute. And I would say that no real estate portal has done a great job at this yet. So let's dive into that and see what we mean here. All right, so a couple portals have made some major acquisitions in the mortgage space. So back in 2018, Zillow acquired Mortgage Lenders of America. REA Group acquired SmartLine, and just earlier this year acquired Mortgage Choice. So these portals are spending hundreds of millions of dollars to get into the mortgage space with mixed results. This is in Australia, REA Group, right? Top portal down there. After they acquired this mortgage broker back in 2018, their mortgage revenues actually went down. All right, that's not a good sign. Nobody makes an investment case saying, we're going to get into mortgage, we're going to acquire this business, and revenues are going to go down. It's profitable, even a positive, but revenue is going down. Ouch. Over the past 3.5 years, REA Group has generated over $2 billion in EBITDA, in net profit, right? $2 billion. Only 38 million of that has come from financial services, mortgage. That's 2%. And that acquisition, right? When they acquired SmartLine, it was an acquisition price of 83 million bucks, 38 million, like they haven't paid for it yet. 3.5 years later, they haven't paid for it yet. So again, just to kind of put this into perspective, if you remember the giant circle from the beginning of my presentation here, 92, 93% of revenue growth coming from the core listings, like this is another way to think about that. 2 billion in EBITDA from everything, only 38 million from mortgage and financial services. Similar story at Zillow. Looking at, in blue, the revenue since it acquired MLOA, Mortgage Lenders of America, it's gone up. To be fair, this big increase in FY20 was pandemic related, right? Record low interest rates. But revenue did grow, but still unprofitable, right? Everything's kind of unprofitable. A little bit of a profit last year, but this year it's still unprofitable. And if you look at that same kind of metric for Zillow, for the past 3-4 years, it's generated close to 600 million bucks in net profit, coming from its IMT program, Premier Agent Rentals, all of that. Whereas Zillow mortgage is lost money, right? net profit over those number of years is negative, losing tens of millions of dollars. So the growth, the profitability is all in other areas, not mortgage. It's hard to get it right. And you kind of keep going around the world. So Domain in Australia, their adjacency business, revenue relatively flat, EBITDA negative year over year over year, not making money, losing money. ImmoScout24 in Germany, it's mortgages revenue, in kind of its mortgage and relocation business, to be fair, but it does include mortgage, but like flat revenue. This is not exponential growth. This is not anything to be super excited about. It's actually quite hard. It's quite flat. So, summing all that up, the track record of real estate portals getting into mortgages is mixed, right? Low profits, slow growth. And these are some of the world's largest, most sophisticated and well-resourced portals trying to do this. We're measuring this time span in years, not months. All right. So mortgage is a very important part of the end-to-end real estate ecosystem. And a lot of portals are trying to do that. But you got to open your eyes and think about this. If you're looking at the numbers, this is where we're at right now. It is hard. And the results here are absolutely mixed. Low profits, negative profits, and sometimes negative growth, sometimes slow growth. It's really, nobody's cracked the code quite yet. All right, so acquisitions and divestments. This is, kind of looking at where companies are investing, right? So, what I did for all these portals was look at the acquisitions they've made, over time. And this is benchmark against just total number, total amount spent, millions of dollars. And, there's a lot of acquisitions, but kind of getting deeper into that, a couple things are highlighted that I'd like to pull out here. So first off, if we're thinking about lead gen, some of these big investments were all in the lead gen space, right? Realtor.com with Opcity, Axel Springer, ImmoScout, the ones I mentioned earlier, all in that area. And then you have mortgage. So REA and Zillow really are the ones that have made the biggest investments in the mortgage space. So some big investments there. And then if you benchmark, if we get away, what I wanted to do was get away from just dollar figures, right? So I scored all of these investments based on kind of the investment significance. All right, so what that means is I looked at the acquisition price when they acquired a company, like Axel Springer here, benchmarked against the annual revenue of that portal, right? So if your annual revenue is $10 million, for argument's sake, and you make a $10 million acquisition, that's a much bigger deal for that company than a $1 billion company making a $10 million acquisition, right? It's all benchmarked on company size. So, if you go back here, like Zillow acquiring Showing Time for $500 million, big deal, right? That's a lot of money. It's bigger than any other acquisition. But Zillow's a huge company. It's bigger than any of these other companies listed here. So for them, it was less of a big deal than some of these other acquisitions. And so that's what this score here is trying to illustrate is, again, benchmarking the acquisitions to revenue, annual revenue. And this is interesting because some of the biggest ones there are all in these same key areas that I've been talking about, right? Lead gen and mortgage. Axel Springer, Realtor.com, these are real kind of bet the company moments. These are huge investments for them relative to how big the company is right now. Even with REA Group, with Mortgage Choice, that was a big investment for them. So these are kind of the ones that highlight, and to me, that all feeds into the same concept that I've been talking about, right? That reflects the strategic importance these portals are placing on next gen, lead gen, and mortgage. These are not small little endeavors that they're starting up, that they're putting out there. These are big. They are, in some instances, bet the company moments. This is where the company is going. Think about in Germany, ImmoScout24, right? The core listings business is flat. So they truly have to bet the company on a new business model. And they're making a huge shift to do that, getting into next gen, lead gen as a way kind of that, that's going to outline the next 5 or 10 years of that business's growth. Same with REA down in Australia. The two biggest investments they've made over the past couple of years have been in the mortgage space, right? Realtor.com and Opcity, that was a big acquisition in 2018. It's still a huge part of that, of Realtor.com's future growth, right? If you think about the next 5 years and where it's going to come from, that's it, right? These are kind of bet the company moments, not not bolt-on acquisitions, but strategic acquisitions that are going to lead the portal in the next years of its growth. On the flip side of acquisitions, you have divestments, and I'm just touching upon it now, but it is something I go deeper into with the full report. But a number of portals like Domain, Zoopla, and EmoScout24 have kind of divested a number of assets since 2018 to focus, to refocus on the core and to get closer to the transaction, which is really interesting. It kind of brings those portals back into the center. It's less about more of the transaction. We're going to be the place where somebody can go for everything: utility switching, moving services, insurance, all of that, right? And we're actually just going to focus on the core, because again, that's where the majority of revenue growth is coming from. Zillow's exit from iBuying also plays into this, right? That's a significant retreat away from the transaction. And that kind of gets Zillow, closer back into that portal comfort zone, right? Where they're not super close to the transaction. But they're more of a independent third-party marketplace, helping match buyers and sellers, helping advertise properties, helping connect people, but not being right in the transaction. And this is going to be interesting to watch, to see if that portal comfort zone changes over time, right? Zillow got kind of like Icarus, right? Flew a little too close to the sun, got burned. How close will the other portals get? I don't think we'll see, in 2022, all the major portals launch iBuying businesses and buy and sell homes. But as they get deeper into the finance and the mortgage space, that does open up other opportunities for them that are close to the transaction. So that's going to be really interesting, kind of looking at this line and seeing the activity and the fluidity around how close portals get to that and how comfortable they are. But for the time being, Zillow's pulling back, which at the end of the day kind of lets me update this graph, this chart that I wanted to update. This is what I'd say where we're at right now, quite different than where we started, quite different than this kind of uptrend up and to the right. In fact, it's more kind of, it's been up and to the right, and now it's this recentering. I think that's the big theme, the big trend. And if I were to think about, what the next couple years look like, it's probably more of the same. Right? It's looking at where revenue growth is coming from, the core listings business, getting into adjacencies like rentals and mortgage, not all adjacencies, but just a few, trying to figure out mortgage. Right now, it's just not working from an economic standpoint for the portals. It's really hard, but it doesn't mean it's not a key part of the ecosystem. And if new models like power buying are coming out, and it's about buy before you sell, or doing cash offers, that's going to require a financing component. So I think continuing to push that envelope, but let's not forget the core business model, right? It's listings and lead gen. That is where 93% of revenue growth has come from. And then that's where the majority of revenue growth will most likely continue to come from. And you see that in these kind of bet the company acquisitions the portals are making. You see that in revenue growth, and it's all right there. And a big part of that shift is also next gen lead gen, right? You can't just charge more money. You can't just keep raising prices. That doesn't work. But you can make business model shifts that are good for everybody. Next gen lead gen, I think, is good for everybody. It's good for consumers. It's good for the portals, and it's also good for the agents. But the key is it's good for the agents that participate in it, right? It's an exclusive network. So if you're in that network and it works for you, great. If you're not in the network, it doesn't work. But continuing to evolve the model. So that's kind of, I think that's it, kind of in a nutshell, what I wanted to cover today. I hope that was helpful and interesting for everyone involved. There is a full report. This isn't a big sales pitch. It's like 200 slides. If you go to my website, you can click around, you can email me, and I'll point you in the right direction. But it is, it's for sale. You got to pay for it. I think it's well worth it, but I am biased. But yeah, it was a lot of fun to put that together, and I'm happy to kind of come out here today and talk about some of those key highlights. So I hope everyone enjoyed it. Thanks again. I hope everyone has a good holiday and whatnot, and I'm sure we will speak soon. All right, take care.